This is a preview video. Thanks for joining us at xam.com. The U.S. economy is arguably firing on all cylinders. We'll be looking at the latest GDP data out on Thursday and, of course, the outlook for the U.S. dollar. I'm Cristina Marujos. With me today is our senior investment analyst, Marios Hadjikyriacos. Marios, markets anticipate a strong GDP report this week. What could the data tell us about the U.S. economy right now?
Hello, Cristina. So the U.S. economy looks to be doing pretty well. In fact, the US economy looks to be stronger than any other major economy at this point, Cristina. And there's pretty good reasons behind that. So the big one, for me at least, is how much the government is spending. So the Biden administration is running an enormous budget deficit at 5.5% of GDP. This is the largest deficit the country has ever run outside of recessions or major wars. So all of this government spending has helped to safeguard economic growth, alongside, of course, a very solid labor market that's supporting household incomes and therefore spending. So with the government spending a lot and the US jobs market being quite healthy, it seems like the US economy reaccelerated in the third quarter of the year. The official forecast is for US GDP growth to come in at 4.2% in annualized terms. That's double the 2.1% that we saw in the second quarter. So this would be an extremely impressive acceleration in economic growth, Cristina. And I think there's even some scope for an upside surprise for a stronger than expected GDP report. And that's mostly because of what the Atlanta Fed GDP Now model is signaling. So the Atlanta Fed has a model that attempts to estimate GDP in real time. And that model currently points to a growth rate of 5.4% for the third quarter, much higher than the official forecasts. Now, this model has a pretty solid track record in predicting GDP surprises. So if there is any surprise in this data set, Christina, I think it's more likely to be a positive surprise rather than a disappointment.
Marios, now let's look at the US dollar. You have been arguing that the dollar right now is probably the most attractive major currency. Why do you say that?
There's lots of factors behind that. The big one is that the US economy currently enjoys the strongest economic growth among the developed economies. And the dollar also offers the highest interest rates. We saw some huge moves in US yields lately. When yields go up, that essentially has the same effects as raising interest rates. So over the summer, the dollar's interest rate advantage got even bigger without even the Fed raising interest rates. The bond market tightened policy for the Fed, yields on bonds went up, that makes the dollar more attractive. So we have a situation where the dollar enjoys the strongest growth, the highest interest rates, and at the same time, there's no viable alternatives to the dollar in the Forex market. The euro is facing recession risks. If you look at business surveys, they are warning that the Eurozone economy might be in a technical recession very soon. The yen has been ravaged by interest rate differentials. The Bank of Japan refuses to raise interest rates still. And of course, the problems in the Chinese economy are dimming the outlook for currencies that depend on the Chinese economy, like the Australian or the New Zealand dollars. So when you look around at the Forex market, the dollar looks to be quite attractive and nothing else really seems attractive. I think that's a combination that could keep the dollar rally going, and this GDP data might help the dollar. If they surprise to the upside, that might help the dollar to resume its rally.
Marios, thanks so much. This was a preview video here at xam.com.